Hello, I'm Rafi Gold. This is the Investigator, and today we're going to be talking about why I am short MicroStrategy. Some disclaimers: I'm not a financial advisor, this is not financial advice, and I do hold an active short position in MicroStrategy. Alright, so before we can talk about anything else, we got to talk about the two ways that MicroStrategy can raise money since their business doesn't really generate any profit. So they have no money being brought in from the company. They need to make money. How do they do it? Well, there's two ways they can do it. They can do convertible debt, which is selling debt at a higher premium than what your share is. So if your share is trading at around $430 a share, instead you sell shares to a company as debt at $672 a share for a total of 4.5 million shares being sold, and then you have $3 billion. Then, once that date reaches its expiration date, if the shares are above the strike price, or in this case 672, when the debt matures in, let's say, July 2029, they are converted into shares. So the people that bought the debt get paid back in shares. Dilution occurs, but it's not as much as at the market dilution. Then, if the shares are below 672, the shares are instead converted into cash. And because MicroStrategy doesn't really hold cash and also doesn't really make any money, that would force them to sell Bitcoin in order to pay back the debt. We'll talk about why that's bad more later. So then at the market dilution, Michael Saylor looks at the price of his shares, he looks at the price of Bitcoin, and he says, I like this. He goes ahead and dumps shares into the market at the bid price, and he takes the money from that and he goes and buys Bitcoin. So some key differences: convertible debt isn't going to cause immediate selling pressure because the shares aren't diluted until the expiration date. So they're in the fully diluted float, but they aren't immediately added to the active float. This at the market dilution is immediately diluted, and it immediately reduces the amount of shares that each share is worth of the company. And then the thing about convertible debt is it locks in a price that MicroStrategy has to reach in its share price for the debt to not be converted into cash. So in this scenario, they have to reach $672 a share, or they have to pay back $3 billion in cash to whoever they sold the debt to. And there's also preferred stock, but MicroStrategy does not have any of that, so we're not going to talk about that today. Alright, so MicroStrategy's genius strategy, the absolute arbitrage, the infinite money glitch. What is Michael Saylor's genius idea that no one else could think of? So that convertible debt and at the market we talked about earlier, he sells convertible debt to institutions, he dilutes shares onto the market, boom, he has a ton of cash, he uses that to buy Bitcoin, more and more Bitcoin. Everyone sees he gets more Bitcoin, the shares go up, he sells and dilutes more, and then he repeats. That's it. Selling his company and buying Bitcoin. Selling his company, buy Bitcoin. That's his whole strategy. The only future strategy he's really talked about, besides doing this, is lending out Bitcoin to currency lenders and giving them Bitcoin and taking that currency to buy more Bitcoin. Then, when Bitcoin inevitably goes up, because of course it can only go up forever, he takes that Bitcoin, sells a really small amount back to get the cash back since it went up so much in price, and then he pays back the lenders, has more Bitcoin in the end, and everybody wins. Okay, so in this video, I want to talk about how I'll be determining the fair value of MicroStrategy shares. Given that MicroStrategy's tech business incurs millions of dollars of losses annually, I consider its contribution to the company to be basically negligible. Therefore, I believe a fair valuation for MicroStrategy shares should align to a 1-to-1 ratio of the total Bitcoin holdings to market cap, accounting for fully diluted shares. So MicroStrategy currently holds 423,500 Bitcoin worth $45 billion and has a fully diluted market cap of 115 billion. That means they trade at basically a 260% premium, seemingly without justification. So if you were to buy a Bitcoin, you would have one whole Bitcoin. You took $100,000, you bought a Bitcoin, you have one whole Bitcoin. If you put to have $100,000 and you go and buy MicroStrategy shares, you're going to have something closer to 40% of a Bitcoin. Alright, how convertible debt and at the market create a false sense of value. So as you can see here, this is data based on their most recent convertible debt offering in November. And as you can see, after the offering, they increased their total Bitcoin by 7.4%. That's a lot. They can increase their Bitcoin per share by 5.03%. So everyone that owned a share, now their share is worth 5.3% intrinsically in the amount of Bitcoin it holds, and the shares outstanding only increased by 2.26%. This is beautiful. Look at this. They only increased their shares by a little amount and increased the amount of Bitcoin per share by way, way more. So what's the catch? Well, basically, this 5.03% growth in Bitcoin per share correlates with the need to grow market cap by 55% by the time the debt matures in June 2029. For this to not be converted, for this to be converted into money instead of shares. This is more than an 11 times value market cap discrepancy. So we're looking at a $430 share. It's getting sold at a strike price of 672, but the amount of value per share that's actually being increased is 5%. So if it's worth $430 a share, you increase the value per share by 5%. That's like maybe $480 a share, not 672. So there's no reason that this amount of increase in Bitcoin could possibly reach the strike price that should be initiated by this increase in Bitcoin per share. All right. So Michael Saylor has said pretty frequently in the past few days and weeks that he plans to, in the future, not do at the market dilution as much and do mostly convertible debt offerings. And I'm going to show you how this is exponentially going to make the stock more and more and more overvalued. So in this scenario, each time the stock price meets the 30% premium of the previous offering, they offer a new amount. So the last offering was a 55% premium. I'm going to be generous and assume they're only going to do a 30% premium per offering. And so the last offering was at 672. This won't be exact. Maybe he'll wait for this stock to reach 500 to do another offering, or 600, or maybe even less. Maybe he'll do another convertible debt offering at 672 at the same share price. But this just assumes that he waits for it to reach the previous strike price before he does a new offering. So each offering, he raises $3 billion to buy a new Bitcoin. And so in this graph, the stock price starts at $672.4, and it's going to grow 30% with each offering in order to reach the strike price so that it doesn't have to be converted into money. So after the first offering, it's going to go up to 874, and you can see it goes up more and more and more. So as you can see, as he does more debt offerings in the future, the amount that he increases the Bitcoin per share, or the intrinsic value of each share, is going to grow maybe 25% if he does $15 billion worth of convertible debt offerings. But the amount that the share price has to grow for it to not be converted back into cash, causing a snowball back down, has to grow so much. So could you imagine if these $672 shares grew the amount of Bitcoin they held per share by 25%, but then increased 200% in value? It just doesn't add up for that to happen. So we're going to get into more about why the share doesn't work. So as you can see, this is a graph that shows the actual share price versus the theoretical share price that it should be worth based on a 1-to-1 ratio of Bitcoin market cap to Bitcoin held. So this is the percent growth over time of Bitcoin, the actual share price, and what I think a fair share price would be. So as you can see, everything's making sense through 2023. It all makes sense. It's basically following almost exactly what it should be to a 1-to-1 ratio. And here we see Bitcoin start to go on a big bull run. It's increasing a lot. And obviously the theoretical share price should increase, but it starts increasing almost exponentially, starts shooting up because of Bitcoin's bull run. Now, as you can see here, we're trading at something like a 100% premium to a fair share price, and then it goes through some consolidation, and then he starts doing all this more at the market dilution and convertible debt offerings, and it shoots even more, and today it's trading at a 260% premium. Way, way too high for what it should be. And as you can see here, it made sense. Here, this discrepancy in a fair share price versus the actual share price is just not adding up. And as you can see, based on all those previous, or based on its total diluted float. So once all the convertible debts and all the shares that he has promised to people are all diluted, uh, this is the price that Bitcoin would have to reach for the uh, share price to reach a fair value. Also, assuming based on the last June 2029 convertible debt offering, the price has to reach $672 a share. So based on the fully diluted float and the fact that it has to reach $672 a share, Bitcoin would have to reach $425,000 for it to be a fair 1-to-1 ratio. And this doesn't even account for more ATM and convertible debt that he's probably going to do in the future, which is going to increase this discrepancy even more. Alright, next up, MicroStrategy is engaging in downright egregious at the market dilution. So from September 30th to December 8th, MicroStrategy has increased its total shares float from 197 to 230 million worth. So that's almost a $30 million increase in shares, and that's worth more than $10 billion. So he diluted $10 billion of cash of shares onto the market. This is because Michael Saylor knows that his shares trade at a ridiculous premium. So when he does at the market dilution and goes and buys Bitcoin, it actually decreases the ratio of Bitcoin, or sorry, increases the ratio of Bitcoin per share. So as he dilutes it decreases the ratio of Bitcoin to market cap closer to a fair 1-to-1 ratio. So assuming a share price of 408 and an average Bitcoin price of 105,000, that these things stay fixed and he does more and more at the market dilution, this shows how many new shares he would have to issue, assuming no more convertible debt offerings, in order for the shares to align well with the total Bitcoins held. So as you can see, it would literally take millions and millions and millions and hundreds of millions of additional shares in order for it to even get close to being fairly valued. And it will never actually reach it. This is a limit. No matter how many shares he dilutes, it will never reach a fair 1-to-1 ratio. And also, this dilution causes selling pressure, and shareholders bear the weight. So as he starts dumping shares onto the market, shareholders are the one that have to pick those shares up and give them money. So it's going to cause selling pressure. And then also, MicroStrategy has bought 40% of its Bitcoin supply in the last 2 months, basically at its all-time high. So this is reducing its average cost basis. So before, they bought their average Bitcoin for something like $40,000 a share, which is pretty good. It's at $100,000 now. But now, since he keeps buying Bitcoin, no matter the price, at basically all-time high levels, he's starting to increase that average cost basis, which means that the amount of increase he's made on the Bitcoin he's bought is starting to go down and down and down as he buys more at all-time highs. Alright, now we're going to talk about the Ponzi scheme aspect. So as you can see, this is another graph that shows the percent that Bitcoin has grown, the percent that Bitcoin per share has grown, and the value of that Bitcoin per share. So this is a factor right here of how much Bitcoin has grown and how much the Bitcoin per shares have grown. So yeah, you can see here, this makes sense. The value per Bitcoin per share and the share price stays the same. And here we start to see a huge discrepancy and it trading at way too big of a premium. And so this is the vicious cycle. MicroStrategy shares trade at a premium to their net Bitcoin holdings because investors expect the company to increase Bitcoin per share over time. This premium allows MicroStrategy to issue convertible debt or at the market shares at favorable terms to raise capital. The funds are raised, which are then used to purchase more Bitcoin, which increases the Bitcoin per share metric. This growth appears to justify the initial premium, attracting more investors, reinforcing the expectation that Bitcoin per share will continue to rise. As Bitcoin per share grows, the premium expands further, enabling more capital raising and additional Bitcoin purchases. This creates a self-reinforcing cycle where the premium feeds itself, driven by investor expectations of perpetual growth. So the people that bought here are really happy. They bought at the very top of the pyramid, and as he starts to do this at the market onto new shareholders, now their shares are basically worthless now, but they say, hey, In the last couple months, he increased the Bitcoin per share by 70%. Maybe in the next couple months, new shareholders will come in and increase my Bitcoin per share by 70%, and then new investors will come in, and it creates this huge Ponzi scheme where the people that are buying the at the market shares now and buying shares now are doing it on the basis that they expect this number to go up and that they're at the top of the pyramid. But nobody really knows when the pyramid will reach a bottom, and somebody says, hey, there's no reason for these shares to be trading at a premium in the first place. This shouldn't work. So yeah, now we're going to talk about the collapse. If investors realize that the premium is speculative and not supported by intrinsic value, the cycle breaks. For example, MicroStrategy may face limits on capital raising due to dilution concerns. People might actually start wondering, oh my god, you've diluted your share float by 300% in the last couple of years. That's a lot. When is it going to end? Market conditions or financial strain could halt Bitcoin purchases. If Bitcoin crashes, it goes through cycles. If Bitcoin crashes and it stops trading at a premium, then all of a sudden it doesn't work anymore. As soon as your shares stop trading at a premium, you can't sell shares to increase Bitcoin per share, because selling a share is actually going to decrease the amount that each share is worth by the same amount that you buy of Bitcoin. Investors might reassess and see that the premium was based on unrealistic assumptions. When this happens, the premium collapses and the share price converges with the underlying of Bitcoin per share. This exposes the fragility of the system and its dependence on continuous investor belief. Crypto bear markets. So even if you're the biggest crypto Bitcoin bull on the planet, the one thing that you gotta admit is Bitcoin can shoot up, but it goes through cycles and it can shoot down. And so for a regular Bitcoin holder that just buys Bitcoin, they can wait through this. But let's say Bitcoin is going through a really, really harsh cycle. It's down 90% from its previous all-time high, and all of a sudden MicroStrategy has its debt obligations and has to pay back its debt. This would force MicroStrategy to sell all their Bitcoin at near extreme low levels in order to cover their debt costs, further driving down sentiment and price of Bitcoin, while also forcing them to sell Bitcoin at huge, highly more amounts at the amount that it bought. Like if it crashes 90% and it was buying them at all-time highs, it's going to have to sell 10 times more Bitcoin than the amount it got in money in order to pay that debt back. This would also, the premium that we've seen seems to diminish when Bitcoin goes through bear markets or isn't rising, as we saw that graph below. And falling Bitcoin prices and forced sales would reduce MicroStrategy's value further. Now we got the apocalypse scenario. So we've already talked a lot about this, but basically I feel an apocalypse scenario is a scenario where MicroStrategy is forced to sell Bitcoin in order to cover debt obligations. So this would be a Bitcoin fire sale, because they'd have to sell tons and tons of Bitcoin at low prices in order to pay back the debt, flooding the market of Bitcoin. And this would be like a feedback loop where they have to sell more Bitcoin. Bitcoin's price goes lower, sentiment goes lower. Now new debt is expiring. They have to sell even more Bitcoin to cover that debt based on how many convertible debt offerings they did, and it could keep on going and going and going and going. So as that happens, it would turn into a huge snowball of convertible debt needing to be paid back that was issued at all-time highs, and then you're having to sell huge amounts of more Bitcoin to cover back the premiums that the institutional investors paid. Next, we got to talk about, is Bitcoin's recent rally driven by MicroStrategy's aggressive buying? So MicroStrategy is buying literally billions of dollars in Bitcoin, and this probably had at least some part to play in Bitcoin's new rise. Obviously, Trump winning was a great impact on Bitcoin, but you got to say this type of extreme buying is going to change the price of Bitcoin. So large consistent buys reduce available supply, potentially driving up prices. Their strategy signals institutional confidence in Bitcoin, attracting additional buyers. And then one thing that Michael Saylor, I've seen him talk about a lot, is their gentle buying strategy, where he says because they buy in small amounts over time, it actually doesn't have any impact on the price. This does not make any sense, okay? If you're buying $42 billion of Bitcoin, it doesn't matter how slow you buy that Bitcoin. That much of a decrease in Bitcoin supply is going to drive up the market over time, no matter how slow you buy it. Because Bitcoin has a fixed supply, significant and consistent buyer eventually reduces availability, pushing prices higher regardless of the buying pace. Traders anticipate more MicroStrategy purchases buying ahead of them, which means they expect the amount of supply to be reduced even more in the future. So not only do you have this active buying of Bitcoin that's driving up the price, but Bitcoin markets are pricing in even more buying by MicroStrategy in the future because they're starting to buy so aggressively. And so while gentle buying may smooth out immediate spikes where you're not putting in an order of 10 billion Bitcoin in 1 minute, which is going to shoot the price up and then have it come down, but over a long period of time, it's going to raise the price of Bitcoin just as much as it would to do huge purchases at once. MicroStrategy adds no value to the world. So we got companies like NVIDIA that are powering the age of AI. They're making great AI GPUs that can run tons of calculations. Microsoft's creating servers, has a cloud service. Apple, everybody that I know has an iPhone. They're making a product that everybody uses. But MicroStrategy literally does nothing to the world. All they do is buy Bitcoin from shares. They're simply shifting capital from where it used to be into diluting shares and getting money from that and buying Bitcoin. They're moving money from one place to another. Even in terms of the Bitcoin ecosystem, they're not miners or developers or people who help run the blockchain. Their purchases do nothing to improve Bitcoin's functionality or adoption or infrastructure. The aggressive buying reduces circulating supply, driving up prices temporarily, but this doesn't reflect organic growth or real world utility. They're just buying it and holding it. They're not even using it for anything. They're basically saying this is digital gold and we want it all. But if somebody owns all the Bitcoin in the world, that's basically useless because you need to have transfers of Bitcoins being made for it to have use. MicroStrategy benefits from the rising Bitcoin prices as investors' speculation, but it doesn't add any underlying value to the Bitcoin market. And this is a very aggressively leveraged risk where if Bitcoin prices start to fall, it goes in the exact opposite way, and their forced selling could destabilize the market because they'd have to sell fast and in such huge quantities that they'd end up harming both MicroStrategy and Bitcoin investors without developing broader benefits. MicroStrategy does not have a unique idea. The idea of diluting shares and selling convertible debt is something that any company in the entire world can do. Other companies like Mara Holdings, Core Scientific, and Metaplanet have done the exact same thing to acquire Bitcoin. So anybody could be issuing shares and buying Bitcoin. And honestly, the one that trades at the highest premium is the one that's the best to do it because they're the ones that are increasing the Bitcoin per share the fastest. Uh, it's a common financial tool. It's easily replicatable and it has no productive value. Unlike companies that use debt to fund operations, innovation, or growth, MicroStrategy just uses the money to buy an existing asset that is already there. Whether Joe Schmo has 7 Bitcoin or MicroStrategy has 7 Bitcoin, it doesn't affect anything happening in the world. So their transfer of Bitcoin from one person to another does not add a single value to the world. There are companies that use money that they actually have that's not debt if they think Bitcoin is a good investment, like Tesla, about $1.5 billion in Bitcoin in 2021 without issuing debt or diluting shares. Instead, they used existing cash reserves, demonstrating a far more sustainable method of acquiring Bitcoin. So, if you really like companies that buy Bitcoin, buy the stocks of companies that are not issuing debt and diluting shares in order to acquire that Bitcoin. Okay, so this is big. MicroStrategy has something like a $100 billion market cap and it was recently added to the NASDAQ 100, which is a collection of the biggest 100 stocks in America. This inclusion increases exposure to institutional and retail investors due to the widespread adoption of QQQ as a core portfolio holding. So why this matters? There's automatic share purchases. So there's a bunch of retirement and pension funds that just buy up index those like QQQ and they're just going to buy shares over time no matter what the market conditions are. And means that MicroStrategy can take advantage of this automatic buying and do more at the market dilutions because they already have this automatic buying which they can factor in and use that in order to raise more money. Increased demand for shares. Being part of the QQQ forces index funds and ETFs to purchase MicroStrategy shares, potentially inflating the stock price in the short term. But it also exposes QQQ investors to the big risk. I think that there is going to be an inevitable crash for MicroStrategy in the future as the premium degrades and the Ponzi scheme collapses and the Bitcoin per share stops increasing at an exponential rate. And when that happens, because it's in the QQQ, it'll actually have an impact on the entire market because it'll drop the NASDAQ, the QQQ, and in part that will reduce sentiment of other stocks and it could even cause a wider collapse in the market. Alright, so does Michael Saylor know what he's doing is a scam? Is he really just innocent to everything? Does it really work? Or is there something a little bit darker going on here? Let's go ahead and look at the MicroStrategy insider sales. Do you guys think they're buying or selling? What do you guys think? Let's go ahead and look. Sell, sell. I'm not seeing a lot of buying here. Sell, 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 sell. Wow. It looks like every single person on the entire MicroStrategy team is dumping shares as fast as they can. And another thing about MicroStrategy is they have a huge amount of insider ownership. 13.18, that's extremely high. If you look at something like Microsoft, it's like 0.03. So this is a huge amount of shares. Clearly they know that this Ponzi scheme is going to exact collapse at some point, and they're taking advantage of that by dumping their shares. Look at these. $7 million of shares dumped. 7 million, 7 million, 7 million. I mean, he just can't get rid of these shares fast enough. So he seems to know what's going on. He probably is confused that it's even worked out for this long, but he's definitely taking advantage of retail and other people that are buying MicroStrategy shares to dump them on him. And this is a lot more that can be dumped. This is billions of dollars of shares that could be dumped in the future. Alright, the one scenario where MicroStrategy wins and why you still shouldn't invest. So for MicroStrategy to reach a fair one-to-one valuation based on fully diluted shares, Bitcoin would need a substantial price increase. This chart shows the required price that Bitcoin needs to reach by 2029 in order to maintain a fair valuation, factoring in future convertible debt offerings. This does not even factor in more at-the-market dilution, which MicroStrategy is very likely to continue. In this scenario, Bitcoin would need to rise hundreds of percent, while MicroStrategy shares wouldn't rise at all, meaning you'd be far better off simply buying Bitcoin. So this is what would happen if he doesn't do any more convertible debt offerings, and it's just the share float. Bitcoin would need to reach a price of around $400 based on their fully diluted float, and the fact that it needs to reach $672 a share by June of 2029 for the debt to be converted into shares. And this shows how many, what price it would have to reach if they keep doing these convertible debt offerings at higher and higher premiums. So if they do 5 more offerings, their share price would need to reach literally $1 million per share in order for the shares to maintain a fair one-to-one premium. So it's just getting worse and worse and worse. If you really think that Bitcoin is going to hit $1 million a share, what you should do is just buy Bitcoin, the asset itself, or buy an index like IBIT, or even buy IBIT options if you really think it's going up this much. Because if it really does happen this way, you're going to be far better off just holding that instead of holding MicroStrategy shares. So conclusion. I've analyzed many companies as an investor, but none come close to being as ridiculously flawed as MicroStrategy. Its business model borders a scam and a Ponzi scheme, relying on endless debt and dilution to survive. The fact that this operation hasn't been shut down by the SEC, to me, is quite frankly baffling. It is a period scheme-like dependency where it requires new investors to keep buying shares at a premium in order to keep the premium there and to keep the Bitcoin per share rising. If Bitcoin prices start to crash or the dilution loses its appeal, the entire structure collapses. So you got some catalysts in the future that could cause a collapse. Falling Bitcoin prices, which would reduce the value of MicroStrategy's total holdings, or failure to meet debt obligations, which would force the company to sell their Bitcoin at depressed prices. This is why I think the company offers a very promising short opportunity. The price action recently has seemed to be plateauing, signaling potential exhaustion of investor enthusiasm. I saw today it was up 10%, but in the last couple of weeks, when I entered short, it's still down like 30%. Additionally, constant at-the-market equity sales and significant selling pressure will further destabilize the stock. I don't think Michael Saylor is done ATMing, and as he ATMs and dilutes shares and adds selling pressure, that only helps the shorts even more. So, in my opinion, it's not a matter of if, but when MicroStrategy's unsustainable strategy will collapse, and it offers a significant opportunity for short sellers who can weather short-term volatility. If you are just a really big Bitcoin bull and you're wondering if you should add MicroStrategy to your holdings, I really don't think it's a good idea. If you think Bitcoin is going up and up and up, and then it's on a long-term upward trajectory, I'd recommend not buying MicroStrategy and just purchasing Bitcoin directly to avoid paying the huge premium and avoid exposing yourselves to the massive risks tied with MicroStrategy's debt and share dilution. Thank you for watching. I hope you learned something or enjoyed, and I'll see you guys again very, very soon. Later.